Hello and welcome to this episode of China's DeepSeek Moments, a video series by the Asia Society Policy Institute's Center for China Analysis, where we explore surprising or underappreciated breakthroughs in China's policy and tech landscape and their global implications. My name is Lizzi Li. I'm a fellow on Chinese economy here at Center for China Analysis, and I will be moderating today's discussion on China's stablecoin and digital asset Gambit, its implication for Hong Kong, dollar dominance, and RMB internationalization. Beijing is recalibrating its approach to digital currency, a shift that came into sharp focus in June this year when the US Senate passed the Genius Act, which is seen by some Chinese analysts as a calculated strategy to anchor the dollar at the center of a modernized, blockchain-enabled financial system. Beijing seems pretty cautious at the moment, emphasizing service to the real economy and financial stability, but it's also experimenting. Hong Kong in particularly is emerging as a lab for RMB denominated or potentially if other formats of digital assets and stablecoins, while Shanghai is also rumored to be testing stablecoin applications in trade, supply chain finance, and asset tokenization. So what does this all mean for RMB's future, the dollar's dominance, and the evolving financial order? To help us unpack this complex and fast-moving story, I'm joined today by four actually stellar panelists. First, we have Dr. Douglas Arner, professor at law at the Hong Kong University. We have Dr. King Ao, who is an executive director of Hong Kong's Financial Services Development Council. We have Diana and Bert, who are senior fellows here at CCA. Thank you so much for being here. And let's dive right in. Bert, I'd like to start with you and take a step back and look at the bigger political and economic picture. So President Xi Jinping spent years constraining the financial sector, but recently People's Daily declared finance a matter of national importance in Chinese 国之大者, right on its front page. What's behind this apparent shift in tone, Bert?
Well, first, Lizzie, this is a great topic because I'm in Beijing at the moment, and stablecoins and RMB internationalization, multi-currency international monetary order, they're all the talk of the town. So it's a really hot topic. Second, on your question, I think there's two reasons, and one is the domestic reason. I think there is a growing sense with the leadership that, to get this efficiency, this productivity increases out of the economy, you need a well-functioning financial sector. And as you said, it's a sector not like the Americas, not speculative, not blowing bubbles, but one that serves the real economy. And I think that is sinking in. The second is the international aspect. And Xi Jinping has declared that now making China a financial superpower is an official goal. And once you start thinking about that, one of the first things that you think, well, you cannot be a superpower in somebody else's currency. So the internationalization of the RMB is therefore one of the first orders of business. Peng Gongshang, the governor of the central bank, has picked up that theme in a recent speech and is really picking up again the theme that Zhou Xiaochuan, the former governor, picked up in 2009 after the the global financial crisis. So we're going to see more of this, and the stablecoin law that now passed in Hong Kong, I think, is only the beginning.
Fantastic. And building on that, Dr. Ao, I want to turn to Hong Kong, which is often described as the bridge between China mainland and the world, particularly in finance. In the current climate of geopolitical and tech competition between US and China, how does Beijing envision Hong Kong's role here? Why does it see Hong Kong as the right place to pilot those digital finance experiment?
Yeah, thanks for this great question. I have to mention one country, two systems, right? Everyone is familiar with that, but I just want to reiterate why it is so important when it comes to finance, because we adopt common law, right? That's very well accepted globally, and US dollar peg. And more importantly, we have free flow of capital and information. Now, because of geopolitics, Hong Kong becomes even more unique than before. We are a truly super connector, right? China actually becomes a superpower in terms of manufacturing. I want to share an anecdotal story. I was in Europe and Middle East recently. I was told by some of my ex-clients, CIOs of major funds, they said in the past, they only have one portfolio. That's US-centric with China as a satellite. But thanks to Trump, because of the introduction of tariff, all the fund managers in the world had to start looking at their portfolio to study the impact of tariff. And then they realized, oh my God, the whole world depends on China because we're the only country that has a complete manufacturing ecosystem. And then things like DeepSeek just, again, prompted people to realize that there could be two different technology standards globally going forward. So therefore, China will become a major portfolio, as a consideration to all serious investors in the long run. And that highlights, again, the importance of Hong Kong, as I said, those key aspects. That makes Hong Kong now currently ranked third in the world as an international financial center, just behind New York and London. I have every confidence that we can move up the ranking very soon.
Fantastic.
And therefore, it's the same as all the other Stock Connect schemes that we're very familiar with.
Oh, great. Well, thank you so much. And turning to Professor Arner. So, Professor Arner, you've written extensively on Hong Kong's financial advantages compared with other cities and metropolis. What makes Hong Kong such an effective testbed for offshore RMB innovation, in your view?
Thanks, Lizzie, and thanks for the invitation to be here. As I said, as everyone else has said, I think this is a particularly good time for this topic. And as King has mentioned, the key with Hong Kong is Hong Kong over the past 45 years or so has emerged as one of the world's leading, most sophisticated international financial centers, not just from the standpoint of listing of securities, but also from the standpoint of foreign exchange transactions, derivatives transactions, wealth management, assets under management, payments, etc. And the end result is we have a very deep and experienced financial sector, both from the standpoint of institutional population, as well as from the standpoint of human capital and global expertise. And as a result, that really makes Hong Kong, given the one country, two systems system, an almost unique place to take offshore RMB transactions. And as a result, Hong Kong has, as Bert highlighted, the RMB internationalization process is something that we started in the aftermath of the 2008 financial crisis. And Hong Kong has already emerged as the leading center for that. So if one is thinking about next steps, this combination is pretty unique.
Fantastic. And, you talk about Hong Kong, but I also wanted to, invite you to share your insights on Beijing's strategy here. Do you think Hong Kong's, new digital currency blueprint fit into China's larger, broader financial strategy? Could Hong Kong's role as a financial digital RMB hub and stablecoin hub strengthen Hong Kong's geopolitical relevance? Is Beijing playing something bigger here?
So I would actually say initially, the Hong Kong strategy to develop digital finance wasn't necessarily an extension of a mainland strategy. In other words, Hong Kong was looking for a role, and this was a major opportunity. However, and I think Bert highlighted this nicely, the geopolitical environment has now changed very dramatically in a short period of time. And that change is now not only driving developments in Hong Kong, but I think we're also seeing, out of necessity, really, the central government in Beijing looking at how the digital development that is already taking place in Hong Kong could play into this broader pattern of monetary sovereignty and geopolitical development.
Fantastic. And Diana, Picking up on that, how do you see Hong Kong's, stablecoin regime interacting with China's digital RMB? Are these initiatives competing or complementary with each other? As you sort of, you did a lot of research on this front, which part of our CCA project is focusing on.
Yes, I see them actually as competing because they're governed by two very different regimes. And in one of these regimes, in the central bank digital currency regime, which is the ECNY, first of all, in terms of the technology, this is a centralized technology, but also the creation, the payment system is on government rails, and the government doesn't lose control over the supply of money. In the case of stablecoins, it's different. And if you sort of go back in time, China was actually against crypto assets in general and the decentralized infrastructure. But in some ways, because the US has now taken this very unusual step, ultimately, fractional banking and fiat money has been a very difficult thing for governments, or will be a very difficult thing for governments anywhere in the world to give up. China is willing to experiment further with stable coins in Hong Kong. It had banned crypto in China, and that remains the case. But it's interesting here to actually think about also what's more efficient, because we have the RMB internationalization drive as one reason, but we also are looking at a global payment system that's extremely inefficient. It takes days for the money to come from one country to the other, but also it is very costly. In the case of the US, 2% of GDP annually goes on banking costs for cross-border transactions. Now, the digital infrastructure is a incredible revolution that could bring cost efficiency. These transactions happen in seconds, as well as bringing down the cost of conducting the transactions. However, it is extremely energy intensive. And with the building of data centers for the rollout of AI, there is a huge competition here as well for energy resources. And from that perspective, central bank digital currencies, especially on the dashing consensus that the PBOC created, use a lot less energy to verify these transactions. I think also between stable coins and central bank digital currencies, there is the issue of trust, contract, etc. And I think at some point, what will become a very important part of the system is the whole smart money idea, the smart contracts that are associated. A lot of the times I get questions like, well, why digital money? It's anyway digital, nowadays. It's not a paper money. And so you have to explain that it's a very different system. And it's not just the fact that this is produced by typing on a keyboard.
Right. And Diana, onto Enbridge, which I know you also did extensive research on. Do you see Hong Kong's stablecoin regime interacting with Enbridge in any substantial way? What role could initiatives like Enbridge play alongside stablecoins in building RMB's cross-border settlement infrastructure?
Yes, it could interact, because one of the sort of guiding principles of what China is trying to build, as well as Enbridge is trying to build, is the interoperability with anything else out there. So, for example, if you are a foreign country that doesn't have its own central bank digital currency for domestic use, that doesn't mean that you cannot use Enbridge. And it doesn't even mean that you have to have a central bank digital currency at all. So yes, they are there's built-in interoperability that will be part of the development of both sides. And I think in some ways, I would argue and I would say that central bank digital currencies are the better route forward for totally rewiring the global payment system, whichever system it's used, US or China. Of course, you know very well my view that, and it's been a view that I've held since 2018, that the world is bifurcating in a two-system, one led by China, one led by the US, and not in stable coin-driven system, but China is willing to experiment with that side of things now that the US has taken the lead there. And of course, on the US side, a lot of the consideration is kind of the, if you'd like, the MAGA support aversion to any form of restriction, government control, overseeing, data privacy, etc. Although, again, I would argue to the White House that they don't have to have a US digital, central bank digital currency for domestic use and could just have the payment rails for global use, and it will be more efficient. But nonetheless, they've gone down the stablecoin route in a kind of a real drive to, and in fear of China's internationalization progressing, and to try and offer an alternative for more demand for dollars. But I'm not sure the administration has thought through all the implications for monetary policy and financial stability.
Great, thank you so much. And, stablecoin is still a relatively new concept to many of us in the audience, myself included. So I wanted to turn to Dr. Al a little bit. Stablecoin actually featured pretty prominently in Hong Kong's new policy framework. Regulation of issuers is actually set to begin August the 1st. So this is a really good time for this webinar. In your view, will stablecoins here evolve mainly as a payment solution, storage of value, infrastructure supporting other financial innovations? And how does this all sort of jibe with China's financial strategy as far as you can see?
Thank you again for this excellent question. I need to spend a bit of time explaining how the system works. First of all, China is the only country in the world that has a managed currency and a packed currency in a way. You have the onshore renminbi, and then you have the offshore renminbi, right? And they trade differently, right? You have this is the only country in the world that has this interesting setup, and that's where Hong Kong comes in. The offshore renminbi is where Hong Kong can contribute towards RMB internationalization. So now coming back to stablecoin and Web3, I want to highlight because Hong Kong demonstrated really well how one country, two system works. Because back in 2012, the government decided to come up with a holistic regulatory framework for the digital asset industry. And stablecoin, therefore, is just a natural progression of that process. And it also is very clear in Hong Kong from a regulatory perspective, crypto, like Bitcoin and so on, are not payment currencies. The stablecoin new policy that will be introduced tomorrow is different because it's backed by fiat currency. In the moment, it would be all the major fiat currency, such as US dollar, Hong Kong dollar, of course, euro, and even offshore renminbi now. And then how that fits into renminbi internationalization. Again, I need to compare CBDC versus stablecoin. CBDC is more G to G because it's about sovereignty. Each country will have their own system designed for their CBDC. That means connectivity is very important. That's why we have Ambridge project, and now BIS is proposing this Agola, I think, but it's more an enhancement to SWIFT in a digital format, but unlike Ambridge, which is really connecting different CBDC together. Now, stablecoin is very different. It's more a private-driven initiative. So the sovereignty issue in the Hong Kong's regulatory environment goes away because it's backed by fiat currency, right? So, as Diana said earlier, it may have impact to monetary policy, right? How you control the flow of stablecoin affecting money supply and so on. But let's put that aside. But potentially, Hong Kong can serve this role to internationalize renminbi through payment, because the stablecoin regulation that is going to be introduced in Hong Kong, the monetary authority has made it very clear, the government has said it many times, applicant must have actual use cases, right, to apply for the license. And initially, there will just be a handful that will be approved. I've been speaking to some of the many mainland corporations, including banks and major conglomerates that have multiple business lines. They're very keen to introduce renminbi stablecoin in Hong Kong to support their own payment system, because they have global operations. At the moment, again, as Diana mentioned earlier, the conventional payment system is very inefficient and costly. But with stablecoin, it just not just about cost, and also making money programmable. So both CBDC and stablecoin are programmable because they're based on, well, by the way, the eCNY is not based on blockchain, but stablecoins, they're all blockchain based, so they can be programmed. So China has its own systems, very clever. But by the way, the programmability, it differentiates digital money from paper money, and that helps Belt and Road development as well, right? Because a lot of China is the largest trading partner to many countries, especially along the Belt and Road. So that some of those trades are now being conducted in renminbi, but again, the payment system is not efficient. China has its own SWIFT version, right? Arrangement, but again, it's not effective. It's not efficient, as I keep saying. So stablecoin potentially can allow these mainland corporations who have overseas businesses and network to use stablecoin for their own internal treasury management, and as that's the first step. Going further, they can use stablecoin, renminbi-backed stablecoin for trades across border transaction, even between Hong Kong and the mainland. There's this major initiative that was introduced in June between PBOC and Hong Kong MA. That's Payment Connect. I don't know whether many people are aware of that. Now, for small value transfers, right, to mainland China, Hong Kong citizens can just use a mobile app, right, transfer money to designated mainland bank account without any cost, right? Potentially, stablecoin can also be part of this Payment Connect in future. So that I can talk, go on and on forever. So I'll stop here. Thanks.
Well, thank you so much. And I'm glad you bring to our awareness the Payment Connect policy push this summer. But on that, Professor Arner, I want to turn to you. Could Hong Kong's digital currency push pose risks to linked exchange rate system or to mainland's monetary policy? That seems to be a concern to many.
So I think there are a number of different ways to look at it. Certainly, one view is that particularly US dollar-based stablecoins would be a threat to essentially Hong Kong and mainland currency control, and therefore part of the motivation is reaction against that. The second is in thinking about the potential risks that could come from the systems themselves. And in some ways, if you look at the existing structure of the Hong Kong dollar, it's already not unlike a stablecoin in structure. Hong Kong dollars are backed by reserves in US dollars held with the central bank, which looks remarkably like many examples of stablecoins. Now, where the risks do come in, and if we look at in the context of say, stablecoins, where do we see the risks? The first is this idea that there could be essentially a break in the peg to the stablecoin. In other words, that the fixed rate won't hold. And in the same way that we've seen with money market mutual funds, we've seen similar sorts of risks with some of the existing pre-regulation stablecoins around the world. And so that question is very much a live one in every jurisdiction. And that is really where the regulatory framework comes in and the backing of assets. But it is the case that if one were to see large-scale development of stablecoins, if one were to see a run, for instance, on a major stablecoin, that could have an impact in the context of confidence in the market, which could then feed into questions about the currency peg, which is not unlike the situation that we already see with the banking system, which is typically addressed from a regulatory standpoint. In some ways, what I actually think is the really interesting piece is how, particularly from the mainland standpoint, a stablecoin structure is actually a way to use onshore assets, particularly in the context of the interbank bond market, as a way to back use of the currency offshore. And in some ways, this is actually a potentially very interesting way to get around some of the constraints that we've seen in RMB internationalization as a result of concerns around capital controls. And so this is an angle that I think is particularly interesting. And if we're thinking about it from the central government standpoint, clearly one has to see how this system is going to operate in the Hong Kong context and perhaps on the offshore RMB context before one wants to think about this sort of hybrid onshore backing for offshore monetary flows.
Fantastic. Thank you so much. And Bert, I want to zoom back out a little bit with you. So when we talk about RMB internationalization, we know RMB is playing a larger role in trade settlements and reserves. What's driving the progress? Is it more about policy push from Beijing? Is it driven by genuine market demand? What's the current status of RMB internationalization? I know there's a lot of misunderstanding, misperception about it. And, which should Beijing lean on more as it moves forward? Is it policy push further? Is it more on the market demand side? Or is it something else, Bert?
Well, I think at the moment the constraint is the policy constraint and not neither the infrastructure nor the demand. There's quite a bit of demand for to some extent assets, but also borrowing in RMB, because the current interest rates around the world make the RMB quite an attractive financing vehicle. But it's not so easy to get your panda bonds issued, or to get the banking system was still a little bit reluctant to give credits in renminbi. And one reason why China as a whole still has quite a bit of overseas dollar debt is because banks finance themselves in dollars in order to give trade credits and other credits in dollars, which of course is well, not a very smart way to go. But China's constraints on its thinking around capital controls still plays a fairly big role. The second, and I think that is going to be a constraint on the stablecoin issue, is on the stability of the currency. As King Al said, it's a managed currency, and it's by and large linked. Well, it's linked to a basket which happens to have a lot of dollars in that basket, and once you start doing something separate in stablecoins, you might have the problem that you already have: how to get onshore and offshore RMB the same value to the dollars. That might aggravate. And maybe it's not a problem for you and me, but the IMF seems to have problems with parallel currencies on that. The second, and I liked Doug Arner's explanation of that. Yes, you could mobilize RMB assets to do something offshore, but you could also say that that's really capital flight, and you don't necessarily want to have that. So I think there's a lot of policy issues that are still to be settled. But the demand side is there, not so much on the reserve side yet, in part because the asset side of the renminbi is currently not that attractive, but the borrowing side is, the transaction side is, and there the infrastructure plays a big role. The China International Payment System, or TIPS, is growing pretty rapidly, is pretty efficient as far as I can see. Yes, every bank-based system is by definition less efficient than a stablecoin, in part because of the checks on whitewashing and capital flight and other things that are currently not appreciated by policymakers. So I think once stablecoins, and the Hong Kong regulation is actually very good on that. You can't just create a wallet. You have to also go through all the checks that you normally have in the banking system. So, but that brings cost with it as well. So I like to see the financing model of this. My take on it is, though, that given all these complexities, I don't see the RMB as the first candidate for a stablecoin in Hong Kong. I think it will start with Hong Kong dollar, maybe with other currencies. The US dollar can be issued there and the Hong Kong dollar and the US dollar are quite similar. So that is going to be the basis for the stablecoin first. And then over time, if there's no major mishaps, maybe there would be an RMB stablecoin as well.
Fantastic. And before we turn back to Hong Kong, let me just stay with you for a little bit for the barriers still holding back RMB internationalization today, as you mentioned. You mentioned capital control, lack of market trust, and also the financial infrastructure is not as advanced and deep as US dollars. But looking ahead, what kind of concrete reforms could Beijing use and Beijing need to prioritize to advance the RMB's global role if Beijing wants?
Well, first, I actually think that the capital controls don't necessarily apply that much to the RMB internationalization. The reason is that foreigners, if you're qualified, and there's hundreds of institutions that are now qualified, you can actually invest in RMB and you can take your money out. I don't know whether that is efficient as Wall Street, but you can go in and out of RMBs if you want. The constraint is on the domestic side, and that will probably stay for a while because of numerous reasons. But so further opening up those channels would be good. Reducing the cost would be good, but the flexibility in the exchange rate would be good as well. And there, I think China, irrespective of stablecoins or anything else, China comes at a point where you say, well, do we really need to link to the dollar? And the dollar is becoming a less stable currency compared to everybody else. And China's, frankly, the Chinese RMB is being dragged with it. The RMB has been depreciating in recent months because the dollar is weak. So on effective trade-weighted terms, the RMB has been depreciating. That's not very good for all the competitors of China. It actually doesn't give that stability that China wants to provide internationally. So their exchange rate system probably would have to change. With that, with more flexibility in the exchange rate, they can also have a very different monetary policy at home. Of course, the demand for RMB funding is there. And I think there is, as a matter of fact, there has now been encouraging signs that banks are now being encouraged to give credits in RMB overseas, and that of course brings a lot of money into circulation, in RMBs into circulation, which need to find a place, and you can use it for import from China, but you can also use it investment in China. The third, the initiatives such as the Belt and Road initiative that can push harder on A, RMB financing of longer term investments, but B, then also creating a if you want a larger offshore market of the renminbi. So I think there's a number of steps that the government can take, and they can be incremental, but they would all help in internationalizing the renminbi.
Fantastic. And our panelists allude to this tension between balancing financial innovation and oversight. So speaking of Hong Kong's, experimental approach to digital currency, Dr. Al, I want to turn back to you. How do you see Hong Kong managing its ambition to lead in digital asset innovation while maintaining strong regulatory safeguards, particularly around systematic risk, which Beijing is particularly concerned about, and also, around investor protection, which here we talk a lot about in the US. And how much flexibility does Beijing grant Hong Kong to experiment in these spaces?
I think, again, I want to emphasize the importance of one country, two system. As I mentioned earlier, we started looking at digital assets as early as 2021, 2022. At that time, even now, crypto is completely banned. Even mining, right, was banned, started to be banned in China at that time. So coming back to this Web3, in fact, it goes beyond just digital currency. The Hong Kong government is very keen to develop the Web3 economy. The government has established a formal Web3 steering group comprising business representative, academics, and industry experts. And stablecoin, therefore, becomes a key to this Web3 economy. Because if you're going to adopt blockchain in real life economic transactions, you need to have a payment currency that is on-chain, right? And stablecoin, therefore, is a natural solution. So it is on. I believe it is in that context that the Hong Kong government is looking at stablecoin. It's not a knee-jerk reaction to the U.S. development, because Hong Kong started looking at stablecoin long before Trump became president again. Because we have various experiments to try out tokenization of real-world assets, such as the Project Ensemble, right? There's quite a lot of projects that have been tried out. I think 36 participants involving in 20 tokenization projects, including financial firms from Western players as well as on the mainland. Right? So therefore, tokenization of real-world asset is definitely a key driver for the Hong Kong government as part of the Web3 economy. So now, coming back to your question, how to manage, how to balance, right, regulation and innovation. Hong Kong has always been very consistent in the way we apply regulation to the market. We don't flip-flop. We may be slow at times, but we want to make sure that we have a holistic approach. Taking crypto asset as an example, we first of all look at investor protection, money laundering first. Right, making sure we have a framework for that to regulate the operator, creating guardrails for digital currency, in this case, stablecoin, and also applying consistent philosophy to managing market risk. That is, same activity, same risk, same regulation. Maybe different implementation method, but when it comes to risk, whether because crypto or digital asset, if it becomes they're traded as securities, then it will be regulated by SFC, right, using existing framework. But I'll give you an example what I mean by different implementation. When you manage manage risk in conventional financial market, it's easy. You have off-the-shelf risk management modules or softwares. But when it comes to digital assets, every firm has its own proprietary risk management approach. So therefore, it was a challenge to regulators to come up with a holistic approach. That's also why initially people thought Hong Kong regulators were slow, but actually they were buying time to study, how to manage these diversity in terms of different tools, risk management tools, and new business models. Right? So There are other approaches as well. The government has made policy statements from time to time on new developments, a new concept. In this case, digital asset. It was June this year that we made a policy statement version 2, number 2, 2.0, focusing on an acronym called LEAP, that is licensing, education, application, and protection. So that's the overarching principle for the market to go forward. And the SFC also earlier in the year issued a roadmap for the digital asset industry. There's another slogan or acronym called ASPIRE that stands for access, right? Safeguards, products, infrastructure, and relationships. I think of all those, infrastructure is most important. And that's why SFC is also looking at the new regulatory framework for virtual asset trading over the counter and the custodian services. So the aim is to develop a holistic ecosystem addressing both risk from the operating perspective as well as safeguarding the investors in terms of education and protection.
Fascinating. Thank you so much, Dr. Al, for offering that perspective. And finally, Diana, please, shed light on the larger geopolitical consequences of all this. Do you see these new digital initiatives we talk about today as a meaningful step toward reducing reliance on US dollar and mitigating sanctions risks potentially for China? How do you assess the potential for mBridge or stablecoin to reshape regional or even global payment networks and potentially weaken US-centric financial infrastructure? What's your take on that?
Well, before the Trump administration came along a second time, and now we have the stablecoins initiative or sort of a law in the US, it was a clear-cut advantage to China. Because at the end of the day, if we sort of separate the role of money into medium of exchange, store of value, and unit of account, and we put store of value and unit of account to one side for now, and we focus on medium of exchange role, which actually is typically the first function of money that transitions when there are transitions between global reserve currencies. Well, as Bert mentioned, China, what it really wants essentially is to be able to buy what it needs to buy from the rest of the world using its own currency on its own payment rails. And of course, with the very large network effects enabled by the SWIFT network, it was very difficult to create its own traditional system, which SIPS is, which incorporates both the payment bit, but also the messaging part, because the US dollar-based system is combining the SWIFT, which is the messaging, as well as the correspondent banking relationship. And SIPS has both in it, but it is much more costly. And so from a cost perspective, it's a real hindrance. And it has grown quite significantly. It has mostly had really Chinese banks as direct participants, and we had HSBC being last year, I think, the first foreign bank to join it. But with mBridge, and I think it was a very important distinction to look at wholesale versus retail, that's very important. On the wholesale side, with mBridge, you introduce such efficiency and again, cost cutting that naturally, especially because China is such a large part of the real economy of the world, there is a natural advantage. I think maybe even a more kind of or less understood aspect is the fact that if you think of the dollar's role as a reserve currency, part of the reason why so many countries had to hold reserves in dollars was also because of the inefficient global payment system. Because as these dollars transit across the world, you need to hold the liquidity. So even by itself, moving to a digital system globally would lower the reserve demand for holding dollars as such. Now, I think it's very interesting that, on that front, China was kind of leading the fray. And the mBridge platform is much more advanced than I think probably most understand. And it's the leader of the pack. But if you take a step back, China has actually been a leader in mobile payments, full stop, domestically. The Alipay, the WeChat Pay. And Beijing, I think, for a long time had a problem that it couldn't really control those guys. And they were kind of creating their own power base, and they weren't really sharing all the data that the authorities wanted them to share. I think that was partly the creation of the ECNY for domestic purposes. But then under Xi Jinping, he got control over that side. And while I agree with Dr. Au that actually Hong Kong in the digital space has been, has followed its own development, but what has been a change now is that Alipay will also be allowed to go into the Hong Kong digital space. And these players, from a China perspective, hold a huge, competitive advantage on the global scene in terms of their expertise. And if you think about RMB internationalization as well perspective, the e-commerce is quite interesting because the e-commerce is where, in some ways, there's a lot of China competition there with the likes of Temu and Shein and so on. And it's another area where you can push the internationalization of the RMB, circumventing the sort of traditional wholesale channels. So I think it's from that perspective as well why, and I do agree that the stablecoins will be more attractive for retail payments, and that would then cover that part of global trade. So yes, the US dollar is under threat, and China and the rest of the world are creating alternative systems that have cost advantages, efficiency, and the trust is the bit where we all have to see, because at the end of the day, just tokenizing doesn't mean that you've actually created the trust. The fact that you see this token and everyone can see it, let's say, doesn't mean that the counterparty on the other side will fulfill their obligation.
Thank you so much, Diane. Dr. Au, was there a further comment?
Yeah, because actually there's already a RMB-backed stablecoin issued in Kazakhstan by a Hong Kong fintech company. Yeah, and actually echoing what Diana said, I mentioned some of the mainland global corporations are keen to use RMB-backed stablecoin for treasury. Some of those names she mentioned just now, so these global digital payment companies. Yeah.
Thank you so much for that additional nuance here. And thank you so much for your insights. And thank you for joining me today in this episode of China's DeepSeek Moment series by ASPI Center for China Analysis. And thank you to everyone for watching this episode. This is certainly not the end of the conversation, but rather the start of a very long conversation, which is even more fascinating from my point of view. Until next time, stay curious. Thank you so much.